Hey traders, welcome to the Raghee report. So we're doing it on a Monday night. We did not have Raghee report yesterday for Sunday, and I thought, you know what, let's do a prime time Raghee report and tackle some questions that you all might have, and we'll make it a quick one. I know we're getting ready for the open tomorrow on this shortened week. So hope everyone's had a great long holiday. If you did, and if you didn't, well, let's just go ahead and just jump into a week that's really already begun. Because even though the equities markets were closed today, the futures weren't. As you can see here, we've got a candle already moving and grooving, and we're looking at a little bit of weakness down into a zone of support that we'll be waiting to see as we get broader participation from the US markets, whether or not that level will be supported. That's a Darvas level, by the way, on the S&P. It's a Darvas level on the NASDAQ. We're in an uptrend on the S&P and in the NASDAQ. And this is where it gets really interesting. Let's take a look here at, and I've been running my toss all day, and clearly it's a little cantankerous, so hopefully it's gonna make it through the show. All right, and I've been working on the webinar slide examples and what we're going to be covering on Thursday, this Thursday, gang. And we're going to, at 8 p.m. Eastern, you can register at simpletrading.com/auto. And we're going to dive into a lot of what's working in 2023, timeframes, tactics, tools, etc. Even if you can't make it live, although I hope you can, register, and that way we'll send you out the replay right away. All right, so what is it that's got my attention for the bond market? We did not get the move I was hoping we would get today, which was a move higher through the 126 handle. Was really looking for a little bit of strength through that 126 handle, which would have meant we've got the kind of momentum, bullish momentum, where in this neutral and oversold environment, the buyers were willing to take price through a threshold and trigger more momentum. Now, that might have been a bridge too far for today being a bank holiday and everything, but let's see what we get. Keep an eye on that 126 handle, because here's why looking at S&P, NASDAQ, and then bonds is going to be so important. And by the way, on this candle here on the 17th, you can see just how close we got to the daily price movement range support. And that's a really important level to watch, gang, because that tells us that we've got that historical volatility level right in here at play. And that gives us more a reason in a neutral market that is oversold, to look for a move back up. That means lower yields. Well, what likes lower yields? You guessed it. S&P, NASDAQ, even the Dow. So you'll see how all these are moving together, but that's not it, right? That's not all. Take a look at the euro. If the euro is sitting at support, very similar pattern, oversold environment, neutral market. So I'm looking at the multi-trend. I'm looking at the sector slow stow. I'm looking at this pattern here. And this one actually did trigger through the 107.13 level as we made a 107.18.5 high. Could be a little tricky, but this is potentially an oversold euro, which on the flip side of that, different side of the coin, but really important. And the other side of that is the dollar being toppy. So that's definitely something we're also going to keep an eye on. And this is the kind of stuff, gang, that I like to do in the evening. You know, what we're basically doing, and it's kind of cool to be able to chat with you at 8 p.m. on a Monday, even though it's a bank holiday in the US, because before I call it a day, you know, really a day, and just kind of wind down, I'll take a look at what the Asian session is doing. I'll take a look at how the US session closed, and I'll take a look at what type of trend structure using the multi-trend, what type of price movement ranges using the DPMR that I could have proximity to, and what that multi-trend tells me I could be doing bullish, bearish, neutral. Look for a buy the dip, look for a sell the rip, look for an overbought or oversold opportunity. So that's where when the day is done and I've already done all my trading and I can just sort of separate from whatever I did that day, whether good, whether bad, and just prepare myself for the next day. And I'm talking, we'll talk here for 15, 20 minutes. This is pretty much my process that I'll go through in the evening. All right. And those are the big four markets that I am looking at. So I know there's some questions coming up. I hope everyone's had a chance to register. It's going to be a great webinar. And if nothing else, what I always hope from every one of these webinar classes is that people get a really good deep dive into what is working right now and what tools I'm using. And in this case, we're going to dive into some really important time frame distinctions that I think is going to help a lot of traders where they might be frustrated with whatever set of tools you're using right now. And it might just be as easy as shifting the time frame, shifting your expectation for follow through, and your time horizon. How long are you in the trade? And little shifts like that, little tweaks like that are what we love to share in these webinar classes so that my hope is when you're done the class, the very next day, you can put some of those ideas to work. That's always my goal. All right, we have some questions that have come up, so let's get into it. Hey there, Christopher. I've been reading your book, Forex on 5. Thank you so much. I'm struggling with identifying the trend using the lazy days lines. Can I please do a quick analysis of the ES? Sure. So those lazy days lines were something that really extend past what the 34 EMA wave does. I don't use that though for necessarily for trend because the wave does it, for us pretty much automatically. And the grab candles, when you layer that on, also does as well. So when we take a look at the ES in terms of the structure, it's an uptrend, Christopher. It's an uptrend. We have predominantly green grab candles, as you can see here. And that means we want to buy the dip. Okay, so what dip, right? What kind of dip are we talking about? Buy the dip actually has just sort of turned into a meme, right? But it works. Buy the dip is sort of, it's made fun of a lot. And the reason for that is a lot of traders don't know what a dip is. A dip is a retracement. A dip is a pullback. It's a reversion to the mean, right? So really, whatever the dip is has to be calculated by something, right? It's not just weakness that we're buying into. What is it? Well, for me, oftentimes I'm going to use the 34 EMA wave. I might use a 200 propulsion. We might have, a Darvis level, right? Another thing that I'm going to use, you're going to see me use it, probably a lot of you have already seen me use it quite a bit, is these daily price movement range zones. This is based on now volatility, right? Rather than say volume or price, this is going to be based on volatility. So depending on the volatility of a market, and I didn't even spell volatility right there. There we go. Depending on the volatility of a market and how wide apart how separate those zones are, once I know I have a bullish bias, it's really a lot easier. Now I know I want to be a buyer, and now I'm waiting for, you guessed it, support. How does that support come about? Well, there's a number of ways we can do it. Price, volume, volatility, right? So it's an uptrend. The ES is an uptrend. I'm waiting for a buy the dip, and that would be exactly what I'm going to do, Christopher. Hey there, Mike. I'm looking at XLU, the utilities ETF on the weekly. Okay. Let's go do that here. So once we go to the weekly, remember, we're really shifting up the time horizon here. This for me is a very long-term look. I can't say that I want to be a short seller here. I'd rather be long. It's neutral. I don't really have an edge in the stochastic. I mean, it's a 50, it's a half mid-range bounce. We're a little shy of the 65 level that I would prefer. There's a lot of things I like for the long. The minor low is there, which is cool. I would have loved it to be a little closer to 65. I would have loved, a little bit closer to that level. But yeah, it could be a decent it could be a decent setup to the long side. I sure don't want to be short, right? The clearer we are on the direction. And by the way, direction, how do we sort that out? The grab candles, the multi-trend, right? These are the things that are going to help us get the clarity, the color of these two rows, the color of these candles, right? Whether blue or green or red. So that's going to help me with direction. And so that's what I say. If we can get direction right, there are numerous entries. It's not as if there's just one magical entry. The challenge that a lot of traders have is that they're not getting the direction right. And then they're wondering why everything, why the wheels fall off the wagon. You get the direction part right. You use something like the grab candles, use something like the multi-trends, and then you go about determining, all right, do I need support or resistance to get into this trade in the path of least resistance? You're going to find your success is a lot more probable because you're not fighting, right? The tide, if you will. All right, so boot on the daily. It's definitely something I'd say is a little bit more of a trend. So here's your daily, there's your wave, there's your mean reversion. You can use the Darvis, you can use the 34 EMA wave. Heck, you could even, if you wanted to be really conservative, wait for a test of the 200 if something like that is going to come. But this would be a mean reversion to the wave, Mike. That's the way I would look at that. All right, next up, why is my President General take on the next numerous? Mark, I don't quite understand the question. What's my take on the Euro US? I'm actually bullish. Corey, it's my pleasure, truly. I'm sitting here in the office. If any of you've never been to my office before, welcome to my office. I'm sitting here in the office working on this webinar, thinking about tomorrow. We got 4 trading days, to make the magic happen. And, ultimately, what we want to do is focus on, what do we actually see? What is the opportunity, right? What is a path of least resistance? Yeah. So no, it's my pleasure, Corey. It really is. And if the more that you all can get some benefit out of this, the happier I am. Yeah. I think that all of us can find ways to find good trades in this market. It doesn't always have to be the same way, but one of the things that I notice, a lot of traders struggle to find tools that work in multiple environments. And that's always been something that I have been very curious about. Right? Wildly curious about. Why is it that so many traders feel the need to have to change things so often? Because they're not using timeless tools. And that's really what I love to do. What are my Darvis settings? There are no Darvis settings. They're automated, so there's nothing to have to change. I use the Darvis from Simpler, so I don't know what Darvis you're using. Darvis is Nicholas Darvis's tool. I call this the Darvis 2.0, not because it's strict Darvis interpretation. If you're using my Darvis, there's nothing you need to change. If you're using another Darvis, you're going to see completely different levels. How do you know you're using my Darvis? Well, I make this freely available on TradingView. All you need to do is search the indicator section for Simpler Trading Darvis 2.0. You will see it. And then if you're a member of the Simpler Trading family of sites, one of them, Options Room, Futures Room, Day Trading Room, My Sector Secrets Mastery, you'll see I make the free 2.0 version available for free to the various members. All right. Okay. Gold on a 1 hour chart. Sure. Let's go take a look. Gold on the 1 hour. All right. So we have GC and we have a neutral market that is, remember, futures are open right now, gang. They were open today. Illiquid, in comparison to what we would typically see on a Monday, but we're getting close to being oversold. We're in a neutral environment. And so, is this the time we look for a mean reversion? No. Mean reversion should be in trends. This is not a trend. So I'll be looking for something like our daily price movement range for a potential buy. I don't have any proximity to that level right now, right? However, that is what I will be looking for. And then, maybe it ends up on the daily. Now you'll see on Friday, look at that low right there, Mr. Walker. See that low at 1827.7? This is very cool. So this is this candle right here. Look at that low right in there. touching that daily price movement range in a neutral environment where we are oversold, and you can kind of see just a little bit of that signal right there, little signal right there. Only because I've got this so spread out, you can't see the little arrow. Uh, but that's where we either want to focus at least on the long side, not the short side of anything, and we're looking for an opportunity. Now, I have to say, we've had this market sinking and touching the daily price movement range. One of the things that you're going to learn on Thursday is just because we've touched this zone doesn't mean we automatically buy or sell. It means that we're in a zone where there could be an opportunity, and we use other tools in a process driven way to confirm, hey, do I really want to buy that? Or do I want to wait for something else to happen? So I have a checklist. I have a sequence that I follow again and again and again. Okay, this is the structure. This is the zone. This confirms the zone. Here's my timing. Do I want to go with futures? Do I want to go with minis, micros, options? All of these are considerations that we can make. This is a GLD for some traders, options. This is a micro gold for others, full size gold yet for others. So it's pretty exciting when we think about all the different ways we could do this. So that's what's happening on the daily. And then on the 1 hour, if we're looking for the next opportunity, it's probably going to have to get down to 1830. If we don't get that, well, Mr. Walker, if we can organize into a green trend, now we can buy the dip. So I need that structure, and then I can get to work. All right. Next up is dark matter. If you have a symbol, I don't know the symbol for that. So if you have a symbol, feel free to type it in. All right. So the next symbol here is TMUS. All right. For a long swing. Well, so this is just going to be Chris. This is going to be my wording. A swing is a mean reversion trade. So uptrend or downtrend, mean reversion, right? However, let's talk about the long, right? Let's talk about the long. Can I be a buyer in TMUS? The last time that we had an opportunity was probably back in here for a TMUS setup, right off this 200 propulsion. If we get a green trend on the 1 hour, we can look to buy the dip, right? That would be fine. But I don't see anything imminent at the moment. Now, I know for a lot of traders, as a market moves higher to higher highs, they're looking to buy. That is not something I do. So if you're looking at this as, Rog, it's really gone up, do we want to buy it? Not that I'm going to say, no, it won't work. It's just not something that I do, right? I'd rather wait for a pullback. I'd rather wait to buy when a market's sinking. I kind of liken it to buying something that I want on sale, right? We understand that concept in most of our lives. We know that if something's a service or a product that we want to wait for it to go on sale. It's not that different in the equity markets, but it's so interesting. The old saying is true. Wall Street's the only place where they throw a sale and no one comes. If anything, people go return their stuff at a lower price. It's a crazy, crazy thing. All right. I have a sell on the Aussie. Let's see what we have here. I haven't been tracking the Aussie, Corey, that much. In fairness, I just want to make sure I make that really clear. Sell on the Aussie. I do not. If anything, this triggered a buy on the 20th as prices went up through 68.85. So I don't. So here's the thing with fib work, Corey. Fib work, I love Fibonacci work. We actually call it Pingala in my room. So I love that kind of work, that mathematical law of nature, right? I mean, that's really what Pingala with Fibonacci is. I'm going to stick with structure. And I think the other part of Fibonacci that can be really, really tricky is it's ridiculously subjective, right? I look for a last major move. I look for minor low to minor high moves. I look for unretraced moves. And so I don't have a fib level that would set up a short. I'm not sure what time frame, though, Corey, in fairness to you. You might be looking at a different time frame. I'm looking at the daily. Right now, when I have an oversold slow stow, I'm in a neutral environment. The trend that preceded was up, right? On the 1 hour, it's in an uptrend. Yeah, I don't have a short, and we're bouncing off the 200. I don't have a short anywhere in focus at all, my friend. So unless it's a different time frame, but let me know. Dark Matter, thank you for the symbol. All right, UROY. All right, UROY, and the question was, any thoughts on this? No, I don't play sub $10 names. Yeah, sorry, I didn't know this was a inexpensive name like this. My advice would be look at volume. Look at where price-based volume is lining up. Look for the point of control. Maybe if you want, from a technical standpoint, wait for it to become oversold on the slow stow, and then look for an oversold fade buy. Yeah. All right. Next up is the SPX. Sure. Let's take a look at what we have here. SPX, if we want to be a buyer on the daily, not so much. I will say this, gang. If you're looking at the SPX, you could easily look at the S&P futures and then choose to go into the SPX as an alternative in the same way that I advise for traders who are interested in the S&P to go with the SPY, right? You can also look at the hourly price movement ranges if you're looking for a very short-term trade, 5-minute time frame. I'm bullish in the S&P, so I'm going to be bullish on the SPX. Okay, Corey, you're on the 30-minute. Yeah, let me know when you have a time frame that you're looking at, gang. Otherwise, it's almost like looking at two different worlds, right? Okay, so thanks for the info. Let's pull up the 30-minute on TMU. Or sorry, that was Aussie US. Okay. And do I have a short on the 30? Let's take a look. I do not. I still don't have a short, my friend. No short for me. And again, I don't know what fib work you did, so I'm not going to by any means say that it may not be valid, but there's nothing on my charts that I would pull a fib from, and I definitely don't have a short setup. Yeah, on that one. All right. So, gang, thank you so much for joining us for our primetime Raghee report. I missed y'all on Sunday, so I thought, you know what? Let's catch everybody on Monday. Markets are opening broadly tomorrow, so I thought let's touch base. I'll see you all for Charts and Coffee tomorrow morning. Let's see how some of these ideas pan out. If you haven't already, be sure to register for our webinar on Thursday. Very excited about that. I'll see you tomorrow morning, 9 a.m. at the Simpler Trading YouTube channel, as well as the Raghee Horner YouTube channel, whichever one you join me on. Heck, I think I'm broadcasting on Facebook right now as well. I will be talking about DPMRs and explaining what they do, because I want everyone to understand what they do and how they could benefit. And then you can make an informed decision as to whether it's something that would be worth your time to learn, would be worth putting on the chart and finding those zones. This is something I've done as a trader for a decade. This is pulling longer term volatility, but with the help of the Lorna bot, who many of you know. She's one of the traders in my Sector Secrets Mastery. She does our tech sessions, and she did an amazing Ask Me Anything session Friday. She has coded this and improved the curation of the data. What's really gotten so much better over the 10 years that I've been using this, and now with the complete automation of these zones, is the way in which we're extracting that volatility data is the best that I've ever had. And it's really been a needle mover. The process is time tested. Now with the data, absolutely the best version of that curation of the historical volatility that I've been able to apply to the market. It's been really, really crazy, freakishly accurate. So I want to show you all on Thursday, but we'll keep talking about it in Charts and Coffee and whatnot. Have a great one, gang. I will see you all tomorrow. Be good to each other. Enjoy the rest of your weekend. And 9 a.m.